So the market gains about 120 points. I mean, it's starting to really show traction in terms of recovery.
Well, thank you, Lerato, for having me. Yes, the market has been showing traction, but I would say performance has still been flat. It's been positive, but flat. But I think what's important to note is that we've seen significant increase in market value. As in, turnover has increased. Today turnover increased by about 16%, while yesterday increased by about 20% as well. So I think overall we've been seeing some increase in turnover, which we hadn't seen over the last, I think, 4 weeks. And I think generally liquidity is increasing, and I think what's driven it, apart from the banking sector, really is the consumers as well. We've seen strong demand in companies like Guinness, Nigeria breweries. We've seen strong demand in Nestle, in PZ. I think overall there's been strong demand in foreign-owned consumer names, and I think it's really driven by the foreign investors. And so even if you see participation over the last few days and weeks as well, it's been driven by foreign investors. Participation has been more or less a 60-40 split in favor of the foreign investors, while local investors have still been quite cautious.
Muyiwa, expectations in the second half of this year. I mean, we're told that if the valuations are pretty good and it's not too expensive to enter the market, locals will be back, people will be moving out of bonds back into equities, and there should be quite a few corporate bonds launched this year. There's great expectation for the market. Do you share that sentiment?
Yes, I agree with you that there's really great expectation in the market, but I think what would really, the main trigger really is the government. We feel government reforms, government policies would drive that, and we feel what would be a strong indicator would be the ministerial list. If from the list, if investors, especially the local investors, see a serious tone from government, I think that would give an indication that government is serious about reforms, and it will increase investment, and so we'd see more participation from the local investors, because so far local investors have been quite cautious. We've seen more funds in the money market. That's when you look at the local portfolio investors like the pension funds, the asset managers, and so I think generally what would expect to change that tone would be government policy, and if we see that seriousness, we expect to see more investments going forward.
As you said, the banks are what's sustaining the market at the moment. How do you expect them to perform given the recent decision by the Central Bank's Monetary Policy Committee to hike rates and also to increase by 100% the cash reserve rate?
I think what the CBN has done really is to try to manage liquidity in a bid to, one, manage inflation going forward, and also curb speculation around FX as well. And so the increase really would increase liquidity, excess liquidity that we expect to see in this sector, because I think with the transfer of bad loans to AMCON, we've seen the banking sector has about 1 trillion naira worth of AMCON bonds, which banks have already started discounting with the CBN. And so even though there's been an increase in the MPR and also increase in CRR, we've still seen reduction in interbank rates. And so it's obvious that the banking sector is still full of liquidity, and so the increase that the CBN has done really won't have a net negative effect, because most banks still have AMCON bonds, especially the distressed banks that have been very active in the interbank window. They have AMCON bonds which they can repo for liquidity.
In terms of investment prospects, let's distinguish between rescued banks, Tier 1 banks, Tier 2 banks. For those who look at the blue chips, the Tier 1 banks, what would be a buy? Because, I mean, at the moment, the prices seem quite low, and yet their results for Q1 were quite good.
Yes, in my view, we feel the Tier 1 banks outperform the Tier 2 banks in terms of performance. If you look at full-year results and also Q1 numbers as well, ROEs for the Tier 1 banks have been strong. They are positive of 10%, with GT Bank coming as strong as 18%. And so what we expect is that the performance of these Tier 1 banks would continue to come up strongly. We've seen strong loan growth. Loan growth has averaged about 8% for the Tier 1 banks. And so within our top picks, we like First Bank. First Bank is our most favorable bank within the segment. We expect a significant increase in its performance. We expect efficiency to improve. We expect cost-to-income ratio to reduce over the previous year. And we feel also the transformation within the bank, the plans to increase the younger demographic in its customer base would also show some continuity in the bank. And so that's why we like First Bank. We also like GT and Zenith Bank. And in our banking portfolio, within our coverage, we prefer the Tier 1 banks. We like First Bank, GT and Zenith Bank. And while in the Tier 2 space, we like Sky Bank. We feel Sky Bank's performance has been quite strong. It's outperformed its peers. ROEs come up at about 10% at full year, and we expect it to end at about 15% this year. And if you look at price to book as well, it's currently trading at par with the coverage and with its peers. But we feel because of the higher than peer ROEs, the premium, it should still trade at a premium to its peers.
Muyiwa, let's talk about the CBN comments attributed to the governor, clarification that's needed. What exactly has the CBN said about the recapitalization of rescued banks, the timetable for this recapitalization, and possible liquidation for those that don't find new owners?
I think from what we got from the CBN has set a timeline, a deadline at the end of 30th of September for banks to be recapitalized, and also for the withdrawal of the guarantees in the interbank market. So from October, we'd expect the CBN to decide on what the measures best to take to recapitalize the banks, because currently there are about 4 banks that have MOUs announced. FinBank and FCMB have announced an MOU. Intercontinental and Access Bank, Union Bank and Africa Capital Alliance, and also AfriBank and Vine Capital. But I think right now the CBN, there's some issues around the MOUs with AfriBank and Vine Capital, and so the CBN has not approved the MOU. And so what we expect is that right now with the district banks that have MOUs announced, we'll expect the process to keep on going, even though there are still a few court cases that might slow down the process. I think that's why the CBN has come up with the guideline, just to show that it's serious about accelerating the process